Elizabeth Warren has an op-ed out today that say that companies are not exclusively accountable just to shareholders, that they have bigger obligations that go beyond that. What she's essentially saying, Raj, is that this idea is passé. The company's only duty is to keep shareholders happy. What do you think of that?
I think that the fiduciary responsibility of management team is to maximize shareholder value. That's a legal obligation. So they have to maximize shareholder value in any way they can, whether that's buying back stock, whether that's making acquisitions, et cetera. So I feel that that's the number one priority. There has to be a fundamental change in the existing corporate law structure, political structure, for that situation to change.
Yeah, you've got to change some rules and laws here.
Well, you're looking at different stakeholders beyond just the investors. So that is something that requires a totally different...
No doubt about that. And I think, and I'm putting added angles on this that the senator did not, but this notion that if you are good to your workers, I think what she's saying, it will benefit shareholders anyway. Companies have a blind spot to that in their restructurings and moving out of the country and all that. And that it would be in their financial interest to look out for more than their shareholders.
Right, symbiotic relationship that you have with your workers and how that feeds into the economy.
I mean, you've seen that with Costco, right? I mean, Costco pays its employees very well, and then the retention is very high, and so you don't see the massive turnover, and you see the sales continue to go up. So there is a balance.
Tesla employees actually own a share of Tesla's stock. They're shareholders, basically.
For now.
Yes, Tesla employees, yes, that's for now.
What do you think, Kev?
Yeah, I think the private markets will reward companies that do the best for all stakeholders, that's their communities, their employees, because they're going to benefit well. They're going to see, they're going to be brands that people know, like, and enjoy. We cannot have the government dictating what companies can or cannot do. We know buybacks actually do benefit companies because they're tax-free situations, right? Dividends are paid out and there's double taxation on that. So the last thing I want is Elizabeth Warren telling companies what they can or cannot do. The private market will reward those that take care of their stakeholders.
And the thing is, companies can treat their employees well when they're prosperous. But when you get technological change coming in, what she's talking about is freezing the economy as it is, keeping things as they are. That's just not going to work. I don't want her, Kevin's point, dictating what you can and cannot do, because that's stagnation. We saw that in the 70s.
All right, I'll put you down as a maybe on Elizabeth Warren. Michelle, could I get your take on that?
I'll be clear in the
future. Your take on that, Michelle. She's also been saying the corporate tax cut that Republicans voted for, because it was only Republicans, no Democrats, she'd redo. She said that was going way too far, and that what's in order here is a hike. What do you think?
Well, I'm not a political expert, but I would say, taxpayers are a stakeholder. Many of these companies, including Tesla, have gotten big tax breaks. They've gotten tax incentives when they've built factories, the battery factory in Nevada, for example. So I do think there's some obligation for some transparency and to pay attention to the taxpayer as a constituency.
Yeah, I think she raises a good point if you think about it. I mean, they do benefit from a lot of favorable tax treatment, especially those who try to shop around factories and everywhere they go. Amazon's a good example, different cities and states. Do they have to balance that with whatever obligations they have to the shareholders? Because, Kevin and Steve both pointed this out, a lot of them have been buying back stock with their tax cuts and all. Now, I know they've had a curse of riches, maybe a feast of riches, and they can't think of other things to do for the time being. But is this going to raise the clamor if we don't see more bang for the buck from these tax cuts that we're not doing enough?
I mean, I don't have a view on the tax cuts. I mean, I think that, for Tesla, they're losing money, so the tax cuts don't have an impact, really, because they have huge operating losses, net operating losses.
But if you go from 35% to 21%, it helps a little bit.
It helps. I don't know how many NOLs they can offset their taxes. I think the issue for Tesla is really around the real demand for Model 3. It's a big question mark. They have 420,000 net reservations. We don't know what percentage of those reservations were folks that were thinking they're going to get a baseline, affordable $35,000 vehicle.
When they made a reservation, they paid money for that, right?
They put a $1,000 deposit, which is refundable.
Okay.
And then if they want to configure the car, change the color, they pay another $2,500, which is non-refundable. Now, what we've been hearing is that the refunds have been increasing because people have been on the wait list for 2 years. And we don't know when the baseline version is going to come out, if it comes out anytime at all. They've just been selling 60,000
Steve just gave up and bought a Volkswagen, right? I mean, it's ridiculous. Right?
No, I mean, so the wait list is so long, we don't know if it's being converted over to configurations. And so that's our concern going forward. And then also, can they make profit on the $35,000 model, the $40,000 model? That's our concern going forward. They can make high gross margin maybe on the 60,000 car, but that defeats their whole purpose of going into the affordable mass market. And that's the challenge, combined with the fact that they're burning through so much cash. They have a very unsustainable capital structure. And the valuation.
Remember, they used to say that about Amazon, though.
Well, all Amazon has to do is raise the price on the shipping 25 cents, and they're going to make huge amounts of profit. They have a massive customer base.
Right.
So the problems are so much different from Amazon versus Tesla. Tesla has to produce these cars at a high volume profitably. Okay. Then the valuation, Tesla is twice the valuation of Amazon and Netflix and Facebook. Tesla's trading at 150, 160 times earnings, next year's earnings. It makes no cash. It's the value. So you have a problem where the valuation is so extreme.
All right.
If the valuation was more reasonable, then you could say, all right, some of these concerns are priced in, but they're not priced in my view.
Final word, Raj. Thank you very, very much. Michelle, thank you as well.